Millions of investors go to Omaha every year to take in the spectacle of the Berkshire Hathaway annual shareholder meeting. These investors travel to hear Chairman and CEO Warren Buffett share priceless financial pearls of wisdom. Well, why travel so far to hear Warren Buffett's speech? There's something unique he uses to be an incredible investor. All of this will be discussed in detail in this video. Make sure to keep watching it until the end so that you won't miss anything. So buckle up and let's jump straight in. Before going into deep details, let's get in touch with Warren Buffett's early years and a little history. American business tycoon, philanthropist, and investor Warren Buffett presently serves as Berkshire Hathaway's chairman and CEO. As of November 2022, he was the sixth wealthiest person in the world and one of the most successful investors in history. His net worth was over $100 billion. Buffett was conceived in Omaha, Nebraska. He became interested in business and investment while he was young, eventually enrolling at the University of Pennsylvania's Wharton School in 1947, before moving to the University of Nebraska and earning his degree at 19. These investors traveled to hear Chairman and CEO Warren Buffett share priceless financial pearls of wisdom. However, Buffett's public investment advice and the strategy he employs as a skilled money manager frequently diverge. Buffett, for instance, has long emphasized the value of indexing and stated, "I think that the smartest thing to do is invest 90% in an S&P 500 index fund." On the other hand, a close examination of Berkshire Hathaway's shareholdings reveals a narrowly focused collection of individual stocks. Buffett has maintained a highly focused portfolio for roughly as long as he has been a professional investor. Buffett previously said, "We believe that a portfolio concentration policy may well minimize risk if it raises, as it should, both the intensity with which an investor thinks about a business and the level of confidence he must feel with its economic qualities before purchasing into it." Buffett regularly advocates indexing over concentrated wagers on particular firms, which feels a bit hypocritical given that he frequently preaches the opposite. However, there is an excellent reason for this. Most people will not, in actuality, be willing to expend the time or effort necessary to study and comprehend enterprises. Before moving ahead, if you are new to our channel, then make sure to subscribe to this channel and turn on the bell notifications for more amazing videos like this. Keep watching. Buffett is aware that people like outcomes with little effort. If so, index investing is the best choice because it allows you to build wealth that can change your life over the long term without requiring any research. Although index investing is a successful way to accumulate wealth, there must be more room for intellectual development. You'll unlikely do any substantial study on the index companies. And that is the actual appeal of purchasing the entire market. With little to no research, you can participate in the world's best wealth-building machine, the U.S. stock market. However, you must at least experiment with stock selection if you're interested in developing as an investor on both a logical and an emotional level. You'll undoubtedly make many mistakes along the way, but those mistakes will help you become a better investor. One of my favorite things about Warren Buffett is that he acquired almost 90% of his wealth after turning 65. I imagine that throughout those 65 years, Warren's business acumen and capacity to spot outstanding companies trading at fair prices also grew. This is a fantastic illustration of the power of compounding, and not just financially. Warren Buffett is undoubtedly a generational genius when it comes to stock selection. He is probably at ease with such a concentration of holdings. But finding and purchasing high-quality businesses doesn't require being a doing this will only make you a millionaire for a while, but you will learn about business and how to tell good deals from bad ones. Like everything else, your skills will improve the more you practice. Consider Buffett's actions and words if you want to be better than average. Buffett adheres to the value investing philosophy of Benjamin Graham. Value investors search for stocks with unreasonably low prices relative to their inherent value. Although there isn't a single widely accepted method for determining intrinsic value, it's typically determined by looking at a company's fundamentals. What do you think? Does strategy matter when making any investment? What is the best investment strategy, in your opinion? Keep watching to learn more. The value investor, like bargain hunters, looks for companies that are undervalued by the market or that have a value that other buyers don't widely understand. Buffett elevates the value-oriented investing strategy. Many value investors reject the idea of an efficient market. According to this hypothesis, stocks always trade at their fair market value, making it more difficult for investors to buy cheap equities or sell them at overpriced prices. They believe that, eventually, the market will begin to reward those high-quality stocks that were temporarily undervalued. Buffett, though, seems unconcerned with the stock market's complex supply and demand dynamics. In actuality, he isn't interested in the stock market's operations. The famous Benjamin Graham quotation he paraphrased, "In the short term, a market is a voting machine, but in the long run, it is a weighing machine," implies this. He considers each firm as a whole, so he only selects stocks based on the potential of the company as a whole. Buffett holds these equities as a long-term investment because he prefers to own high-quality businesses with a strong track record of creating profits, rather than pursuing financial gains. Buffett doesn't worry about whether the market will recognize a company's value when it invests. He is worried about the business viability of such an organization. Warren Buffett has consistently accumulated wealth over many years, primarily through investing. He began investing when he was just 11 years old, to be exact. He started his own business at age 13 by selling horse racing tip papers while working as a paperboy. As an adult, he established his own business and started making money by investing in companies that he thought were undervalued. His riches would increase as he reinvested his revenues into further ventures. Later, he acquired Berkshire Hathaway, where he would maintain his value investment philosophy. According to Warren Buffett, the finest investment you can make is in yourself and discovering undervalued companies based on fundamentals. According to Buffett, there's nothing like trying to better your skills. Exceptionally resilient to shifting economic situations and unaffected by inflation is the self-development of good communication skills and the accumulation of pertinent knowledge. He has claimed that he needs to understand the inner workings of many modern technology companies and only invests in businesses he fully understands. Buffett usually only takes into account businesses with a minimum 10-year history. As a result, Buffett would only be aware of some technology companies that have gone public in the last 10 years. Value investing is not without its detractors, but whether you agree with Buffett or not, the results speak for themselves. As you've probably seen, Buffett's approach to investing is similar to that of a bargain hunter when shopping. It exhibits a realistic, practical mindset. Buffett also carries on with this mentality in other facets of his life. He doesn't own a large home, doesn't collect automobiles, and doesn't ride in a limo to work. So what are your thoughts about this video? Let us know in the comments below. Before leaving this video, make sure to like, share, and subscribe to our channel for more super amazing videos like that. With that said, this video ends, and we will see you in the following video.